We will be learning about what is a working capital turnover ratio. Okay, so activity ratio, it is a form of an activity ratio. So what is an activity ratio? The activity ratios are also called as turnover ratios or performance ratios. Okay, so these ratios are employed to evaluate the efficiency with which the firm manages and utilizes its assets. Okay, so it may be any type of asset. It can be a capital asset, that is fixed assets, or working capital, or a capital employed. Okay, so working capital turnover ratio is also one of the activity ratio. Okay, so in this ratio, what we do is the ratio indicates the frequency of sales with respect to the assets. Okay, so for purpose of calculating this ratio, we either use the total sales or the cost of goods sold. Okay, and are expressed in terms of rate or times. Okay, as compared to the sales, rate and times of sales as compared to your assets. Okay, so working capital turnover ratio. So what is the formula for working capital turnover ratio? Working capital turnover ratio is equal to sales upon working capital. Okay, so what is a working capital? Working capital is your current assets minus current liabilities. Okay, so what does current asset include? Current asset include your inventories, that is stock of raw material, finished good, WIP, all three inventories. Okay, raw material, finished goods, WIP. Okay, plus your debtors, right, that is your accounts receivable, plus your cash and bank balances. Okay, plus any loans and advances which are given. Okay, plus your prepaid expenses. Okay, so all these are part of your current assets. Okay, minus current liability. So what does the current liability? Current liability will include your sundry creditors, or also known as accounts payable, then your outstanding expenses, then your provisions. Okay, so basically all assets and liabilities which fall due in the period of 1 year are included in current assets and liabilities. So current assets minus current liabilities will give you working capital. Okay, so working capital turnover ratio will show you how many times is your sales as compared to your working capital. That is, for the particular working capital invested, what is the time or rate of sale. Okay, so higher the ratio of the working capital turnover, higher is your efficiency of utilizing working capital, and vice versa. Now we'll see an example. Okay, so this is an example in the books of XYZ Company Limited, balance sheet as at 31st March 2017. Okay, then particular current year amount, sources of fund, in that you have owners fund 40,000, equity share at 10 each 4 lakh, 10,000 8% preference share at 10 each 1 lakh, reserves and surplus 3 lakh. So total of owners fund is 8 lakhs. Then borrowed funds, 10% secured loan from ABC Bank 1 lakh, 10% secured debentures 1 lakh, unsecured loans is 1 lakh. So total is 3 lakh. So total sources of fund comes to 11 lakh. Now application of fund, in that you have fixed assets, then you have gross block 8 lakh, less accumulated depreciation 1,50,000. So your net block is 5,50,000. Then investments 1 lakh. Current assets, loans and advances. In that you have inventories 1 lakh, sundry debtors 1,50,000, cash and bank balances 1,50,000, loans and advances 1,75,000. So total of current assets, loans and advances is 5,25,000. Less current liabilities and provisions. And then you have sundry creditors 2 lakh, provisions 25,000. So net current assets comes to 3 lakh. Okay, then profit and loss account debit balance 1 lakh, miscellaneous expenditure to the extent not written off is 50,000. So total application of funds is 11 lakh, and sales during the year is given as 20 lakh. So we have to calculate working capital turnover ratio. Before calculating working capital turnover ratio, let's calculate the working capital. Okay, so working capital is equal to current assets minus current liabilities. Okay, so current assets, so how much is a current assets? Current assets is inventories 1 lakh, sundry debtors 1,50,000, cash and so 1 lakh plus 1,50,000 plus cash and bank balance 1,50,000, loans and advances 1,75,000. So 5,25,000. So 5,25,000 minus your current liabilities and provisions. How much does that come to? 2,25,000, right? 2 lakh sundry creditors, provision 25,000. So 2,00,000. So your working capital comes to 3 lakh rupees. Okay, now working capital turnover ratio is equal to sales upon working capital. Okay, so sales is how much? 20 lakh, right? It's given here, the last line, 20 lakh divided by your working capital. So working capital comes to 3 lakh. So that comes to how much? 6.67. So your working capital turnover ratio is 6.67. That is, your sales is 6.67 times your working capital, so it is higher, right? So that implies that working capital is efficiently utilized. Okay, so this was about your working capital turnover ratio. Okay, now as you can see, the working capital is divided into current assets and current liabilities. In current assets you have inventories, debtors, cash and bank balance, loans and advances, prepaid expenses. Then current liabilities you have sundry creditors, outstanding expenses, provision for expenses. So this working capital turnover ratio can be further segregated into inventory turnover ratio, debtors turnover ratio. Okay, to find out how efficient are each and every components of a working capital. Okay, so that's all about working capital turnover ratio. Thank you.